What is going on? Welcome back to Financial Journey. So today I want to talk to you about ChargePoint. I want to go over some of the current data points, what shorts have been doing, and where I see ChargePoint going from here. Before I get into any of that, make sure you hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So at the time of doing this video, it is up 2.38%. Market's been open about an hour, and it did have a low of $1.65. So as soon as the market opened, it had a quick sell-off, but very little volume. So 2.8 million shares have been traded. 13.7 is the average. These are some of the transactions that did occur on the secondary market above $100,000. So once again, kind of signals that big money still is not really getting into ChargePoint. If anything, based on the latest 144s, they are kind of exiting. So as of right now, the latest news that did come out was on March 11th. So nothing really since then. But like I said, a lot of 144s did come out, signaling insiders and larger institutions, so a larger than 10% stakeholder, did sell out. So not necessarily the best. And of course, that does signal more of a red flag, potentially, especially more so there was a blackout period associated to their earnings. So a lot of insiders selling. Just the timeliness is not good. So of course, you do see a lot of people on social media talking on bankruptcy, on how it is coming right around the corner. So I just wanted to kind of talk on that for a brief minute. So as of right now, the Altman Z score, which is a bankruptcy risk ratio calculation, anything below 1 essentially is more of a red flag. And so it looks like they have been negative since Q2. And so as of right now, it is negative 0.58%. So essentially, yes, they are heading towards bankruptcy. A lot of this does stem from how much they are burning through. So just looking at the cash equivalents, debt, and how much they're burning through, no doubtably, it's going to be dilution. And so that's probably going to be the saving grace for the company over the next little bit. But at the same time, nobody wants to get into a company that is on the verge of massive amounts of dilution. So all in all, that kind of answers why big institutions aren't necessarily getting in, and why at the same time, a lot of insiders are selling out. So again, not necessarily the best. So it does signal that there's going to be more pain essentially coming for the company. Shorts do know this, and this is why they have been increasing. But I just wanted to quickly point this out prior to me going over shorts. The current outstanding shares is 421 million, and they are able to kind of dilute up to, because they do have the authorized shares, at $1 billion. 1 billion shares, but you guys get the idea. So essentially they could dilute quite a lot to really help their bottom line and get more cash in. So that's going to be something that they do probably capitalize on over the next 2 quarters, including this one. So all in all, like I said, ChargePoint definitely is not looking all that good. Aside from that though, going over shorts, like I said, they are very much aware of this. So right now they're increasing 873.79 thousand shares. 23.69% of the free float is being shorted. 91.19 million shares overall are being shorted, and cost per average is 14.32%. Utilization is 95.05%. So I've pointed this out in the past. If you kind of take out and hide ChargePoint's name, for instance, and you kind of look at the numbers here, technically, this is and could be a squeeze play. The only thing that you typically need for a squeeze is a high utilization, a lot of shares being shorted, a high cost to borrow, and then the fourth aspect, which unfortunately ChargePoint has yet to give, is a surprise catalyst. So that's pretty much the only thing that's really holding ChargePoint back. So shorts have been really dictating exactly what happens with ChargePoint, because even for instance today, the volume, a lot of that is just algorithmic trading and shorts. So it's a very interesting dynamic what is happening with ChargePoint. Aside from that though, some of the latest analyst ratings that have come out after their earnings are right here. So it looks like Bill with JP Morgan did reiterate their buy rating, didn't give a price target, but that was done roughly about 5 days ago. Aside from that, you do have, for instance, like $4, $4.25, $6, $3, $3, $4, a lot of good ratings, but a lot of these analysts are A, thinking 1 year out, and B, have very bad ratings. So 41%, 54, which isn't all that bad, 38, 41, even Bill with his 5 days ago is 33%. So a lot of analysts that do cover EVs just suck, because EV, the whole sector, has been very, very horrific. And I think a lot of us generally do know that. So again, I just wanted to kind of go over that for a second. Going over some options within the first, like I mentioned, 1 hour of the trading day, $24,000 in calls being purchased versus 63 in puts. So dollar value that's been really getting into ChargePoint even over the last several weeks has been diminishing. But of the call options that are being purchased right now, 54% of all the options are bearish. And truly, the number might actually be significantly higher than that, because no doubtably a lot of the bullish options that are being purchased are done by shorts just hedging their bets. So if you kind of think about it, subtract that aspect, a lot of the options probably are bearish. And of the call options that are being purchased, there's a consensus for it to be roughly between or above $2, which isn't that great. But looking at puts, there's not really much downside. So people aren't really getting into ChargePoint via puts. So let me know your thoughts on that in the comments below. But as it stands right now with it at $1.71, it is trading between this S3 and this S2. So any stock right now that is trading between the S3 and the S2 does have something fundamentally wrong with it. And of course, institutions are avoiding it. So that's once again kind of another red flag, but $1.58 will be that next strong support that you'll want to watch for it to hold. If not, then anticipate another 52-week and all-time low being created, because right now it is at $1.56. Vice versa, $1.78 is going to be that next strong resistance. Kind of came close to that general area, and it looks like it's gaining some momentum to retest that. But $1.78 will be that next pivot point for ChargePoint, so you'll have to watch that. But aside from that though, let's look on the actual chart. So right now it is lower percentile of the Bollinger Band, below a lot of the key pivotal moving averages. Looking at stochastic, because of the buying that's been happening today, it is actually showing a nice deviation, starting form of one. So the white line above the red, which does signal a bullish sentiment, is starting to kind of pop out. Despite that though, you do see it at 10, so that is considered very oversold. So if there's a good piece of news that does come out associated to ChargePoint, then you will see a rush of value investors. Probably take that with a grain of salt, because again, a lot of the institutions probably are avoiding ChargePoint because of the amount of dilution that probably will be occurring, or maybe that has occurred, just we haven't been aware of that yet. Because again, when it comes down to companies diluting, they don't really tell us right quick. Most common than not, we just find out during the next earnings what actually did happen. So a little bit more of a delayed aspect for that. Number of retail investors have been getting out. It looks like ever since, give or take, probably the beginning or mid-February, so February the 14th. So institutions and also retail have not really been buying the ChargePoint dip. But no matter what though, it has been somewhat trading within a set range, so that's kind of a good thing. The broader market has been kind of going up in a general area, so that has been good, but ChargePoint's not really been participating in that, so there is more of that gap as well. So all in all, I feel like ChargePoint does have some opportunity in the future, but current investors clearly is not really incentivizing for, because nobody wants to invest during dilution. So in reality, maybe Q3 would be a very good entry point. But I do feel, not to be bearish or anything, that there is going to be a little bit more pain before things do get better. But let me know your thoughts on ChargePoint. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. What is your thoughts on ChargePoint? Have you been buying? Do you think it is heading down the bankruptcy route? Because if it does get close to that $1 range, essentially, because if they were to mass dilute at these levels, then the stock price would go down dramatically. But if it does get close to that $1 range, then it might actually have to do a reverse stock split, go down that scary route. And so I think that might just escalate the whole death spiral. So I don't know. Let me know your thoughts on ChargePoint. Don't forget to hit that thumbs up and subscribe. One final thing, take advantage of this promo. Simply sign up for an account with Moomoo through $100 at it, and you get 5 free stocks. Each stock is valued up to $2,000, so take advantage of this. Link in the description below and also the comments. With all that, appreciate all of you watching.